Welcome back. This is Corporate Radar. Markets, of course, are a bit under pressure, about 0.4% lower. 100 points down is what you have. Well, the Cabinet has approved the Insurance Amendment Bill. It allows 100% foreign direct investment into the insurance space from the current 49%. The new legislation also aims to give more teeth to the insurance regulator, that is IRDAI. We have Thomas Devasia, former member, non-life, IRDAI. Nilesh Sathe, former member, life at IRDAI. So we've got both sides covered. Gentlemen, great to have both of you here. Thank you very much for joining us. Prashant this side. Mr. Sathe, let me start by asking you about not what has happened, but what has not happened. So apparently, the composite license proposal is not part of the bill, and neither is the open architecture part of the bill. So composite is, essentially allowing life companies to start non-life business and vice versa. And open architecture, of course, is allowing agents to sell, other policies as well, not just one life and one general, as it is the case right now. So both apparently are not part of the bill. So just wanted your thoughts there, Mr. Sathe.
Yeah, I think some more discussion has to go into it because there was a lot of opposition on open architecture, especially by LIC. Even SBI Life was not in favor of open architecture. So they need to be convinced. There needs to have more discussion on the subject before it is being introduced, because what way it is going to impact business of LIC. Mainly, LIC follow-on public offer is likely to be there, and open architecture should not impact their share price. That may be the thinking of government. So this is what, in my view, probably that is the reason why it has not been introduced in this bill. But maybe today or tomorrow it will come. As we have seen in case of mutual fund, the IFAs can sell mutual funds of any company. Same thing is likely to happen here, and nothing wrong in that. But then let us wait and see, because government may have some apprehensions in introducing the open architecture at this stage.
The company most impacted, of course, is going to be LIC, and perhaps a lot of opposition is government company as well at the end of the day, in that sense. But you're saying, well, not today, but eventually it's going to come. It has to happen. The other bit is this composite license. What about that, Mr. Sathe?
Composite license till the end was what I understood was on the paper, but I am not quite sure why it has not come finally in the bill. I don't have any idea on that. But again, government might have thought that it may involve difficulty in implementation of it, because one company doing 3 lines of business, 3 separate sets of accounts may create some problem. Probably the IFRS and the risk-based capital that is likely to be implemented now, they may have thought that implementing it at this stage probably may disturb the industry as such. This is what is my view.
Yeah. So, by the way, for our viewers, I just want to say, this is what our colleague Sapna is picking up from Delhi, that most likely the composite proposal and the open architecture proposal is not part of the bill, which is going to be, which has been cleared and it's off the table for now. So, when that bill is finally presented in Parliament today or tomorrow, as we understand it, we'll have absolute specifics and we'll be able to be absolutely certain of it. But this is what we understand as of now. So I just wanted to make that clear. Mr. Devasia, just, same question to you. Your opening thoughts, perspective on this?
Good morning, everyone. Nilesh, good morning to you too. My sense is that the government, in whatever they are planning to clear, are basically looking at what's critically needed for expansion of the sector in India. And to that way, perhaps the composite license, as well as open architecture for tied agents, is not seen as critical. Because if I look at it, a composite license would actually be just accumulation of 2 lines or 3 lines of business, which have very clear financial control deviations, governance, etc. And as Nilesh also alluded to it, it may be complicated to supervise and implement. With regard to tied agents, I believe the situation on ground does not change, because especially the tied agents of LIC, who are perhaps the best distribution force in the country, are already, they are basically family businesses. And there'll be other members who are already addressing other insurers for the simple reason of getting the best products out to their clients.
Gentlemen, morning. I have a bigger fundamental question that I want to raise before both of you. The penetration of insurance in India is so abysmal that the numbers actually shocked me, even when I was searching for the latest numbers, right? Non-life penetration is 1%. And this is, I think, total premium as a percentage of GDP. That's the way it's computed. Life penetration has actually declined. It's gone down to about 3.7% from 4%, again, latest available data. So now, I don't know if this is a capital issue, and this is for a sector that came into inception much before mutual funds, right? The first financial products that we as Indians got to know were insurance products. And then these numbers, something or someone has to account for it. I don't know if it's a capital issue. Is it a capital issue? And if it is, then will it be sorted now that there is 100% FDI? Because to me, as a layperson, as a customer, it doesn't seem to be just a capital issue alone. There's something else that's gone wrong with such abysmally low penetration. Mr. Sathe, your thoughts on this 100% FDI?
Yeah, no, 100% FDI was actually necessary because in majority of the jurisdictions, they don't have any restriction on FDI for insurance. So that was expected, and budget announcement was also there by Honorable Finance Minister. So it was certainly going to be there. And we have steadily increased it. See, why 100% FDI? Because we have seen in the past that with less than 100% FDI, you needed to have Indian partner to start business.
Correct.
And there are many industrial houses which are already into insurance. So finding a good, reliable, long-term Indian partner probably was a bit difficult also. So now, okay, if you find it difficult, now we are allowing you 100% FDI. Now you come and start your business here.
Correct.
So that may be the...
Correct. But sir, as you said, the point is that a lot of very deep-pocketed Indian institutions have already been running the business, whether it is large banks like SBI, whether it's HDFC, whether it's LIC. So therefore, Mr. Devasia, let me get your thoughts in. I don't know if really capital is the issue behind such abysmally low penetration, and what changes with 100% FDI?
Okay, so the thing is, when we look at insurance penetration ratios, they're extremely, in my personal view, superficial and also a nominal measure. For the simple reason that when insurance premiums, if you try to bifurcate them, especially on the non-life side, you'll have a huge retail sector and you'll have a huge corporate sector. Corporate sector, the premiums are also increasing because of the underlying value increase, which is also fueled by growth, organic growth and inflation. So penetration, we need to have a new measure for it to actually understand the take-up. It is a capital issue, and I would welcome 100% FDI for the simple reason this is actually a capital-intensive industry when it comes to the exposures on your portfolio, risk exposures. And there are new exposures coming up like cyber risk and all that. There is no capacity, underwriting capacity at all.
Yeah.
So capital is very much required. And I hope the FDI rules amendment will also enable insurers to actually move capital freely between themselves. That said, with regard to why insurance penetration is low, it's also reflecting the disposable income of individuals and households.
So it doesn't have to do with the industry. Gentlemen, so what I get from you is that you're both saying it doesn't have to do with the way the industry has been running itself.
No, the industry requires new capital, requires a number of players, because then only will be the real penetration push that will come.
Let me.
Income does grow.
Yeah, absolutely. I mean, I think it's one of those things, right? I mean, you make more and you want to spend on these kind of things as well. Now, the other thing is, merger of the bill allowing merger of insurance company with a non-insurance company, right, Mr. Sathe? And from a listed perspective, there is this Max Life, Max Financial Services thing which has been discussed over the years. So just wanted your thoughts there, Mr. Sathe.
See, actually, when the Insurance Act was initially introduced, in the sense after 2000, when the sector opened, it was thought that mergers have to be between two insurance companies. Just as only two banks can merge, bank and non-bank cannot merge. There is a reverse merger now allowed, but it was not there initially. On similar lines, initially it was thought that only 2 insurance companies can merge, and accordingly, a couple of insurance companies have merged as well. But
Mr. Sathe, sorry, we want to, I'll just come to you. Just give me 30 seconds. I'll just make a quick mention. There are 2 listings on your screen. Wakefit is listed at 195 rupees per share. It's basically listed at par with the issue price. And there is Corona Remedies, which is listed with a premium of, with a big premium actually, some 30% premium on top of the issue price. So, listings continue. But as I was saying in the morning, maybe in the next 15 days or so, new issue openings, etc., perhaps a little lower, on the lower side, as we wind this year down. So Wakefit 187 and Corona Remedies about 36% higher is a super listing for that one, 1,450 rupees. So those are new listings. Mr. Sathe, go on, sir. Yes. And you're talking about the logic behind now allowing insurance merger with non-insurance companies. Go on.
Yeah. Because especially Max issue has been longing for a long time, because that for almost a decade this is going on, and finally it was thought that what is wrong in it? If reverse merger is allowed in case of banks and NBFCs, why 2 other than 2 insurance companies, 1 insurance company and 1 other than insurance company? I'm not saying non-insurance company, other than insurance company. Why they cannot merge? And there was a lot of thinking going on this, and finally it has been approved, which will help actually some of the sectors to grow also, because it's not a question.
Mr. Sathe, do you have a view specifically on Max Financial? You think the road is clear now once this goes through, or are there any pending issues?
No, I think the road is clear. Actually, this has been made so that the transaction can go through.
Okay.
I think so.
Ah, interesting. So then, the holding company discount for Max Financial should also come down.
Yes.
In that sense, right? So a positive from a share price perspective as well. I have more questions, and it's always a fascinating sector to discuss. So I hope you will come back once we have actual details. I want to emphasize once again, some of what we discussed, of course, is based off the reporting from our colleague in Delhi. And once the bill is cleared by the Parliament, pushed through, we'll have the actuals, and we will sort of, invite both of you and other experts, industry experts as well, to talk about this. Thank you very much, gentlemen, for joining us here on CNBC-TV18.